But I'm excited because we got a lot of cool things happening here. I'm so stoked about this. Oh my gosh, so excited about this the new scanner, or I don't even know what we call it, the new tool on the website. Um, it's been super awesome. I've already been able to grab a couple of good trades off of it and want to show you guys how to use it successfully and what it means, like what the signal is trying to communicate to you. And Yeah, I mean it's just awesome. So I think it actually might be the greatest COT report interpretation that we've ever put together. Which I know is pretty bold. I know it's been around for just 48 hours, but um, I mean it's just fun to have something that exciting that's already proving its weight in gold, which is awesome. So let's jump into it. Like I said, just want to welcome everybody here. Also want to give a shout out to those of you watching this in the recording. But let's go over the disclaimer. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, well, let's go ahead and jump into this. So this is awesome. This is it right here. So I'll just show it to you guys. This is calling this the um, COT price divergence scanner. And I know it's a long name, but it is what it is. So I'll kind of explain the signals and what this is, and I guess why I put this together. So here's the deal. So COT data, for those that don't know what COT report data is it tells us what the banks are buying and what they're selling. Okay. There's some cool advantages and disadvantages to COT data. Let's go over both of those. So COT report data looks at um, what the banks are buying. Okay. What specifically US banks. Okay. And the CFTC regulates these US banks, and they're a financial regulatory authority. They're owned by the government, CFTC, and they regulate the markets. They make sure that fair practices are employed. They create policies and procedures and all this kind of stuff. And one of the things that they do is provide to the public this COT data, and it stands for Commitment of Traders, and it tells us what the banks have been buying and selling on a week to week basis. So that's a huge advantage. The biggest disadvantage is that it's just a 1 week report. It comes out every week on Fridays at 4 p.m. Eastern typically. And we're able to update our scanner and the data and how we look at the data every weekend. But the data is delayed a little bit. Like you're not getting up to date data as far as, the day to day move. However, I don't think that that would even help us. Like, let me put it this way. The banks have huge positions in the first place. Their positions are so big and their movements are so broad in the market that having that data on a day to day basis, I don't even know if it would make a huge, like I said, I don't know if that's a huge disadvantage. What I've learned about COT data over the 6 or 7 years that I've traded with COT data is that it is truly kind of a more of a longer term signal. Me and many other traders have got themselves burnt by COT data by treating it as a short term signal, and so I've had to learn that the hard way. But I've gotten a lot better over time with COT data and how to use it effectively. And so far, I think this is one of the best ways to be anticipating signals from COT data. And I'm excited to dive into this today. This is really, really cool. So, so like I said, it's what the banks are buying and selling. Now, why does that matter to you and me? So banks are better at trading than you and me. I like to think I'm really good at trading, and I've done well. Let's just say that I've done well. Um, but the banks are a lot better. They have tools and they have abilities that we just don't have. They have eyes. They're a machine. And so I like to know what they're doing. Like I try to, even though I like to think that I'm really good, I concede and recognize that the banks are better than me, right? And so that's why I invite the ability to use COT report data. Um, all right, so that's why we use it. And then we take this data and we plug it in to our spreadsheets. I have some spreadsheets that I use where I interpret the data, and we plug it in. And so I had this idea over the weekend. I've actually had this idea for a while, but I finally put it onto paper, and I put the and not only onto paper, but I now created a tool that can interpret the data, I think, a little bit more better and in real time. Many of you who have used this tool on the website have probably noticed that the signals do change. I'm actually trying to work on a way to make it so that it will send you an alert when the signal changes, which I think will be really good. For now, you'll just have to either come check in on it yourself, or wait for me to send you a Telegram message indicating that a signal's changed. But yeah, so the signals actually change in real time, which is awesome. And so I had this idea because the banks, although they're really good at trading, they're not perfect at their entries. Yeah, newsflash, right? Like I think a lot of us as retail traders, we kind of get this idea in our minds that the banks are just like these trading gods, right? They just don't make mistakes, and they do though. They actually do make mistakes. They're very good, but if you think about it, they're in competition just like you and I are. They're trying to take money from the other bank across the street, and so. And collectively, the US banks are trying to take money from banks that are not from here, right? So it's definitely a competition, and they enter into trades sometimes too early, sometimes they get into trades a little late. But like I said, overall they do make money, and so we want to follow what they're doing. So I had this idea. So since they're not perfect at their timing of things, I thought, how could we improve our timing with the COT data, which does seem like to be the biggest issue, right? Because COT data is incredible. Like to me, it's just one of the best ways to trade forex. Um, but if your timing is off, you can you might miss out on a lot of good trade opportunities. You might even find something that's really good, get stopped out on a trade, and find out a week later that if you had just stayed in, you would have made some money. And that's, by the way, still going to happen. Like I'm not trying to say that this scanner is going to be perfect at timing trades. Um, all right, so I'm going to give you some best practices on how to use this. I don't want this to sound like it's like your magic bullet, as far as all I have to do is just click buy or sell when it says buy or sell, and poof, money shows up. There is a little bit of a you still have to use risk management. You still have to look for good entries. Um, yeah, that doesn't negate. You still have to do all those things. But I think this has really helped. And as far as timing goes, I can definitely tell already that the timing of signals is going to be a lot better because of this. And that's because it doesn't just look at the data, because all the other metrics that we've created so far on COT data are just derivatives of the data itself. It's like derivative of the data over the data, or the over the data. Whereas this looks at how the price has moved relative to the data itself. So I've never done this before. It's really cool. So what this scanner does is it's got all 28 major Forex pairs, and then um, it also has NAS 100, US 30, gold, silver, and oil. So there's 33 total instruments in here, and it looks at all 33 of them, and it does several things. The first thing that you'll notice that it does is it shows you the price change over time. So you can see, like, for example, silver is up over the last 3 weeks, 5.68%. US 30 is up 3%. Gold is up 2.59, and so on. You can filter this the other way. Not sure why it does it that way, but that's okay. You can see like the USD yen is down 3.62%, and oil is down 7.2% over the last 3 weeks. So there you go. So that's that. There's that, and you're going to see why that's important in just a moment. Then you've got the 3 week shift. This is pretty standard. You've seen this. This is on the COT scanner, and you've got the 3 week shift on the um, on the Steve scanner has the 3 week shift. It's a pretty important metric, because when these banks buy and sell stuff, they usually buy and sell futures and currency pairs over several weeks at a time. Okay, that's something that I've definitely seen, is they go on these multi-week long raids of the market, and with the attempt to make money, um, in that same period or even a little bit longer. Okay. So that's why we look at the 3 week shift, is because that's about how long, these banks start to build into positions or at least begin a new direction. Okay. Then you have this right here, which is called the price divergence ranking. This is something that I made, and it'll give you a number, positive or negative. You can filter it either way. And the more positive or the more negative a number is how big the divergence is. And I know I don't have a scale to describe that, but it basically looks at how far price has moved one way versus how far the banks have moved another way. Okay, so that's why it's called a divergence.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve Scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Why is that important? So, like I said earlier, the banks are not perfect at taking these trades. So sometimes they get into trades early, but they're very confident about the direction they want to go. So what we're trying to do is catch the banks losing money. That's what we're trying to do so that we can gain an edge over the banks, right? So we're in competition with them just like they are in competition with everybody else. So this is how we're going to gain an edge over the banks here, is because what we're doing is we're catching them taking a, basically, we'll call it like, it's like a bad trade. They're in a bad trade, but these banks, they actually do recover their trades most of the time. Like when they get into a bad trade, the market's probably not more than a few weeks behind trying to, recover and get their money back. Okay. So this is how we're getting an edge against them, is we're identifying them in a bad trade. And so like, for example, with the CAD yen is down 3% over the last 3 weeks. In that same period of time, the banks have increased their positions on the CAD yen to the tune of 59.28%. Okay, so that's a divergence because the banks they're taking buys, but the market's actually gone down, right? In that same period. And again, this is very foreign to a lot of other traders because they're like, how in the world could the market go down if the banks are buying? Well, it does because I mean, like, keep in mind these are just U.S. banks too. There's other banks around the globe that are also trading too that are not calculated in the CFTC COT report. These are just the U.S. banks, which I know is a huge portion of the global market, but it is not the whole thing. So the market can go down. There could be other reasons and variables as to why the market could go down, but the U.S. banks are buying, right? So, like I said, that's what we're trying to do is capture. We're trying to say, okay, hey, the market's gone down, but the banks have been buying. And so, based off of the differential between those two divergent, like between those two variables, determines the ranking. Okay. And the ranking isn't, and maybe that's not the best word. Maybe I need to change the verbiage on that. It's not like, okay, that's in 11th place or that's in 10th place or whatever. That's not what that means. It's just a number that's assigned to how far that difference is. And I know that's a little bit, may not be very, like that may not be the best way to describe this. But that's the way it's done so far. So just know that if it's a very positive or a very negative number, that means that the difference in how far price has moved versus how much the banks have bought is really different. And so when you see those numbers get pretty high, you bet your bottom dollar there's going to be a signal here. So if you don't know how to interpret this number, you might get a feel for it over time. So maybe come in here and check it out once or twice a day or even several times a week. Um, and then compare it with the subsequent signal. So we've issued a strong buy on the CAD yen right now. That's what the signal is interpreted as because based off of where price is and based off of where the COT data is, we're thinking that that's a strong buy. And the reason why we think that is because the banks are going to want to try to recover their loss on this trade. And so that's why we think that the market's going to go up, is because they have bought so much, but the market's gone down. That means the market's overdue for probably a move to the upside, right? That's essentially it in a nutshell. So if you go the other direction, you can filter this by negative shifts. So you've got like the pound CAD, it's -9 on the ranking. You can see that the market's gone up 1% over the last 3 weeks. The banks have decreased their positions on the pound CAD. So they've sold a lot to the tune of 70%. So 70% of all the positions they had 3 weeks ago don't exist anymore. They've sold 70% of it in the last 3 weeks. Meanwhile, the market's actually gone up. So that's why this is a strong sell right now. And actually, that had a really good move. If you go look at the pound CAD, um, holy smoke! I'm so like I did the CAD yen. That's how I made my money. Yesterday was on the CAD yen because it looked like the best one, and I think it still was the best one to trade. But look at this guy. We looked at this one yesterday and it was all the way up here and it was screaming strong sell. It was just screaming sell. And then sure enough, this thing collapsed last night and it may not be over. This could actually continue to just melt away here. Um, Especially with where, I mean, if you still look at the rankings and this current signal, which updates in real time, that is still the signal right now. That could change here. In fact, I think once that drops down to like 8 or 7, -8 or -7, then I think it downgrades the signal from strong sell to more of a just a sell signal. So we'll want to pay attention to that. And then obviously we'll get new data this next weekend that will give us more clarification. Um, but what's cool is as price moves, the signal will change throughout the week. And so you can kind of get an idea of what the best signal would be as the week goes along. So you could filter this. And I still think the best signal as of right now is still the CAD yen. When you compare the how much they've bought versus how far the market is still down, it's got a long ways to go. It did go up quite a bit earlier today. In the last 4 hours, it's down. But if you look at this, um, it actually broke trend too, which we talked about this morning. That if it broke trend, we'd look to maybe get into a price action trade a little sooner. But yeah, if you actually look at this CAD yen for the last 3 weeks, this line right here represents 3 weeks ago. So approximately 3 weeks ago. So you can see this pullback. CAD yen is down 3% since like I said, since 3 weeks ago. And it did have nearly a 1% move to the upside from here to here today. But it's still so far down from where the banks bought, which does have me thinking that this is not the end. Like there's probably still more movement to be had to the upside here on this CAD yen. And the fact that we've now, just on a different topic, um, technical based, we've also broken this trend line here, which does make me wonder if this is going to begin even more legs to the upside. We'll see. We'll definitely see if that's going to be the case. Um, but yeah, very, very cool. Any questions so far on this scanner, this tool that we've put together? I definitely agree. We need to get a name for it. Maybe that's a homework assignment for you guys. If you want to send me a message on Telegram or email, we can give this a name. Because right now that's the name, COT price divergence scanner. So and this is different from, for those that are kind of newer to the program, if you go to the COT scanner, so we got 3 scanners now. I didn't know I was going to be making so many scanners. But yeah, it kind of gets messy when you have too much information on one page. I've kind of noticed that with Steve's scanner, it's getting kind of crowded. Um, but yeah, with the COT scanner, this is only showing you the shifts for those that are kind of new. So you got the weekly shifts right here with the 2 week shifts. This is just showing you what the collective sum of what the banks have done over the last 2 weeks is. You got the 3 week, the 4 week, the 5 week, and the 10 week shift as well. Um, um, and then obviously you got Steve Scanner, which I do want to incorporate the divergence into Steve Scanner because I do think that that's going to improve the weekly signals on Steve Scanner. Absolutely, this will help a ton. So far, I have not included that. I feel like I need to sacrifice something here on Steve's scanner. I was thinking about sacrificing the 5 week shift because I don't know how much information that tells us necessarily. And I thought about just using these 2 columns as a place to show the divergence signals and have that calculate into the overall signal. Because there's a lot of stuff that goes into this one, like the sentiment goes into this, the crowded market alerts go into that, the long-term signals, obviously the 2 different shifts that we look at calculate into the overall signal. Um, so yeah, lots of stuff in here. And so I was thinking about maybe just doing away with the thing that we use the least, perhaps the 5 week shift. And you guys tell me if that's something you're like, no, don't get rid of that. Let me know. But that's the thing I was thinking about maybe getting rid of because I think we really only need just to show the 3 week shift for traders on Steve's scanner or the 5 week. Just got to show one of them. And then I think those other 2 columns, if we free those up, that should leave room for this on here. But in the meantime, I don't think we'll ever get rid of this tool. I think I'll just leave this one period in the member section so everybody will be able to have access to this. Let's see. Okay, let me look at some of these other questions here. And Roger says, I love it. That's awesome. Glad you're enjoying it so far. Jim says, how do you set the trade? Oh, I like that. Roger says, Divergence Distillery. I love that. Yeah, so let's talk about how to set a trade with this. So, um, there's actually a couple of ways you could use this scanner. Like there's there's um there's multiple ways you can gather signals from here. Okay. And enter into the market. One way is I'm not opposed to you just taking the trade. Like if you just want to get into these trades, I'm not opposed to you treating this like a weekly trade where you see the signal there and you throw in the trade with, an average daily range as your stop loss. Um, I don't think that's a bad, just get into that market. I don't think that's a bad way to trade this. And I think you'd actually have quite a bit of success just doing it that way. I think the ideal way to trade this is kind of like what we're doing together in the group is we're looking for price action opportunities. So for example, if we have an idea on this CAD yen that it's likely to go up, we can look for opportunities and locations where we would like to buy rather than just getting in right away. We can look for those places that seem like a better zone. We in fact we took a trade this morning, or we have a trade pending right now to get in on a buy if the market breaks to this zone right here. There's quite a bit of demand kind of nestled in this area. So yes, if the market pulls back into here, we'll buy in and hopefully we can ride it to the upside. And we're trying to actually take this market. I'd love to see if we can take this back to where um, ultimately this is where um, they started to buy. They started to buy over here. And so I think if they can get this market to go back to there, they'll get their money back. Yeah, absolutely. Um, so there's your two ways. Jim, is I'm not opposed to you just running in here and grabbing each trade, taking each one of these. Now, actually, one thing though, I want to say on that. One of the things you'll note about these signals is that they're highly correlated. Okay, that is going to be a theme. So look at these signals here that are in the strong buy, strong sell column. I got Aussie CAD, strong sell, pound CAD, strong sell, CAD franc, CAD yen, strong buys. What's the theme? What's the narrative on all four of those signals? What's the commonality? The CAD, right? So what's going on? Yeah, you guys got it. Yeah, strong CAD, exactly. So what's the danger of taking all four? The danger is if yeah, you're highly correlated. So if you take all four, you're not really diversified necessarily. Yes, there is, the pound or the Aussie, you got the franc involved as well, but on all four of those pairs, you have the CAD. So if you trade all four of them, just know that you're somewhat correlated. Um, so if you want to take it as like a weekly trade, you might as well, if you have a set amount of risks that you want to take, split all that risk up across four different trades rather than splitting it up against, rather than doubling up your risk on four different opportunities. Because if it works, you'll be like, wow, this is amazing. But if it doesn't work, you'll absolutely lose a ton, right? So we got to make sure that we manage that. Um, okay. So that's my only criticism there, or criticism or tip, suggestion, advice, just to help you trade that and just to know that that's going to be the case. These signals in unison will go in, like, let's put it this way. This scanner, you'll notice when it's wrong, everything will go wrong together. When it's right, everything will go right together. So just like I said, if you're thinking about getting diversification here, you're not going to get that. Plus, in trading, you're not supposed to diversify, right? You do that with your 401k, you do that with your IRA. In trading, there's really no use in diversifying. You're trying to gain an edge, right? That's what trading is. You're trying to get an edge in the market. And so that means you have to forfeit diversification in the name of getting an edge and exploiting your edge, right? So, all right, let's look at. So Elise says, so when the scanner signals a good trade, how much of a stop loss do we use? Do we leave it open ended? For instance, no set take profit. Yeah, if you're going to do the open ended way of trading it, that's what I would do is no take profit with the idea. Like I would treat it like a weekly trade. That's what I would do. I would just put in the trade. Um, Use an average daily range as your stop at the beginning of the week, and then put in a no take profit. Make sure you use a lot size calculator though, so that you manage the risk correctly. Um, but I think you could let it rip every single week and you'd be very happy with the results. I don't know if every week you'd, in fact, no, I'll just say it right now. Even though this is new, I'm highly confident that you won't make money every single week. I don't think it'll be a money printer that way, but I do believe you'd be very profitable with it. Um, so if you're looking to get even better results from this, you're going to have to go into the charts. So if you want to take it blindly, you can take it blindly, and I do believe you would actually be successful so long as you put in a stop loss each week. I think you would make money. Um, but um, but if you want better results, you're going to have to do this style of trading over here, where you take the signal and the chart together, and you look for those entries, right? Let's see, Lee says, so a weekly trade unless the signal changes. Yep, that's what I would do. I mean, if you want to just take it, like I said, just as a weekly trade, as a blind trade, that I think it's great. I think it's a great, I would do that. That's a signal that I would take. So long as you're using the lot size calculator and all that, I think you'll be fine. Um, and then the key would be to just do it every single week because you might have a week where you hit your stop loss, but then the very next week, everything just comes together and everything just makes money, right? Roger says, I'm experimenting the modified martingale on it. Nice. Yeah, that's actually not a bad way to use this. I think these are perfect signals for that type of technique because in fact you can see I've literally done that right here with the trades I have open. These are modified martingale trades. So basically what that is you're essentially scaling into a trade as it goes in your favor. So as it goes up, you're adding into that trade up to a certain point. The thing is with this though is you're only adding into the trade if it goes in your favor. I think a lot of people think that the modified martingale means that you add to a trade if it goes against you. Not so. We don't do that here. We don't add to losing trades. We only add to winners, right? And so, um, very important that we go through that. And then let's see what else. If you're going to use the modified martingale, by the way, there's a video on this. If you guys want to use that technique, um, let's go over here. If you go to basic training videos and then you scroll, I think it's at the bottom. Um, it's around here somewhere. Oh, yeah, here it is. Oh, wait, no, that's not the one. Oh, yeah, I think it's this one, How to Trade Martingale. Yes, this is it. This will teach you the modified martingale right here. It says this is a terrible strategy. That's clickbait. Sorry about that. That's not, I need to change that for the basic training library, but this will teach you the technique. The technique, I know it says this is a terrible strategy, but the technique for modified martingale is actually really, really good. If you're going to use a full on martingale where you add to the losing trade, then yeah, that is a terrible strategy. Um, so there you could learn about that there if you need help on that risk management technique. Yeah, so I think that's it. So the ones I'm going to be mostly focusing on when you guys when I talk in the webinars in the mornings, I'm going to be looking at trades like the ones that have the biggest, right here, like the CAD yen that has the highest ranking right now. It was actually at 14 points, like or 14. It had a rank of 14, which was super high. That's come down since this morning. And why is that? It's because the CAD yen has already gone up so much. So it's rebalancing. If you think about it, it's rebalancing. So you want to find the currency pairs that have the biggest divergence, the most outlandish, like wow, the market's gone against the banks, because those are the ones that are more likely to whip back and have a regression back to normalcy, right? So since the CAD yen used to be at 14, now that the CAD yen has gone up since yesterday, now that the signal still exists because it's still kind of a crazy difference, but it is starting to come back because the market has gone up. And so this actually, if this where it says 3 week shit or 3 week percent change, that used to say almost 5%, -5% 2 days ago, right? And now it's only minus 3.28%. And so that's updated in real time. And as that's updated in real time, the scanner's picked up on that and it's already programmed to account for those movements and then provide an updated signal. Now, the signal is still very, very strong. And so that's why we're keeping that there. But you will see these update and change. And you'll know a lot of these are just neutral signals, right? Like the vast majority of everything's neutral. Um, yeah. And so there's really no way to figure out, there's no edge with that. We're not, the banks are doing just fine on those pairs and they're not really losing any money. They're actually losing on this one though. They're losing on CAD yen. They're losing on CAD franc. Um, they're losing on. Oh, and sometimes these load. Okay, so I'll show you. There's like 5 pairs loading right now. If you refresh the page, it might come back. You might have to wait a few minutes and refresh the page if they load up. Um, it's just trying to collect in real time market data on each currency pair. So so you might just have to refresh. It happens a few times a day actually. So but it doesn't last too long. So if you just give it some time, it'll refresh. Um, okay, awesome. Well, any other questions about the strategy, how it works, how to use this scanner? I hope it and yeah, give me some names, guys. So as you guys come up with names for this, it'd be awesome because we got to give this a name. I love it. Divergence Distillery. That's awesome. Yeah, it's great. I love this so much. This is exactly how I wanted to use COT data in the very beginning. And as I've thought about it, I was like, oh man, I think there's a way to set this up. So it's a, displayable tool. So I'm planning on using this quite a bit. All right, guys. Well, have a fantastic rest of your evening. Thank you for coming, and we will see you guys in the next webinar.